Seed money, sometimes known as seed funding or seed fund, is a form of securities offering in which an investor purchases part of a business. The term seed suggests that this is a very early investment, meant to support the business until it can generate cash of its own, or until it is ready for further investments. Seed money options include friends and family funding, angel funding, and crowdfunding. Usage. Seed money can be used to pay for preliminary operations such as market research and product development. Investors can be the founders themselves, using savings and loans. They can be family members and friends of the founders. Investors can also be outside angel investors, venture capitalists, accredited investors, equity crowdfunding investors or government programs. Types of early-stage funding. Seed capital can be distinguished from venture capital in that venture capital investments tend to come from institutional investors and tend to involve significantly more money, and arm's-length transactions, and much greater complexity in the contracts and corporate structure that accompany the investment. Seed funding involves a higher risk than normal venture capital funding since the investor does not see any existing projects to evaluate for funding. Hence, the investments made are usually lower as against normal venture capital investment, for similar levels of stake in the company. Seed funding can be raised online using equity crowdfunding platforms such as Seed Invest, SEEDRS and Crowdcube. Investors make their decision whether to fund a project based on the perceived strength of the idea and the capabilities, skills and history of the founders. Other sources of seed funding. Seed money may also come from product crowdfunding or from financial bootstrapping, rather than an equity offering. Bootstrapping in this context means making use of the cash flow of an existing enterprise. Government funds may be targeted toward youth, with the age of the founder a determinant. Often, these programs can be targeted towards adolescent self-employment during the summer vacation. Depending on the political system, municipal government may be in charge of small disbursements. The European Commission runs microfinance programs for self-employed people and businesses with fewer than 10 employees. European seed capital is available, but typically is limited to a 50% share. European SMEs can often benefit from the Eureka program, which federates SMEs and research organizations, such as universities. Government programs are often tied to political initiatives, for example greentrustwind.co, a means by which the UK placed subsidies in the green sector, or the Energy Saving Trust, designed to draw attention to energy conservation. 23-page description of EU support programmes for SMEs, inventorium.org, Southwest UK specific list, European Commission page on seed and startup finance, references.